Hello and welcome to Trading with Technical Indicators. My name is James Boyd. Today's date, March 2nd. You made it to March. That means that spring is right around the corner. So we welcome all of you here today. We got Brent Morris with us in the chat. We welcome him. You'll see his initials as BM. And we got with us Kevin, Gary, Speak the Truth, Jay Richardson, Robin, Crispy, and many others. Let's go ahead and hop right in. Now, just real quick, Today's focus will be buying on volatility spikes. Now, I've been up since early in the morning, probably 3:30 or so Mountain Standard Time. So I've been watching the markets last night, this morning. Kind of interesting activity we've been seeing on the market. So we'll talk about that. And just real quick, you can follow myself or Brent Morris on X. Just real quick, if you went to, let's say, Brent Morris CS, you'll see this page right here, and I'll put that right in the chat. That way you can actually follow Brent, and he does post educational content and then announcements there. That's what my page looks like. Just notice it's our first name, last name, CS, okay? Follow us there on X. That you can see what we're doing when we're not teaching classes. Also, quick heads up, if you have not subscribed to the Trader Talk channel on YouTube, it's free, okay? That way you can actually see all of our classes. And they're just streamed right on YouTube. Now, just real quick as we get started, quick reminder, the information we talk about here today is provided for general informational purposes only. When we talk about options, which we will some, remember the options carry a high level of risk, not suitable for all investors. So you might practice trading options and say, is this a strategy I would consider? If it is, are there any certain strategies that I might consider? Okay. And that doesn't necessarily mean you would consider all of them anyway. Okay. There's different ones. And also remember when we talk about examples, we will do that in the paper money software application. Investing involves risk, including loss of principal. And I want to give you a quick heads up. If you go to schwab.com, we'll be right back. All right, just want to give you a quick heads up. If you went to schwab.com/events, you're going to see some of the upcoming events we have in Denver, the 27th and 28th. So that first day, technical analysis, second day, option strategies. Dallas, advanced options. April 10th and April 11th, right, the Gaylord, Texas Resort, and Texan Resort, and also Boston, okay, East Coast. 17th and 18th of April, right at the Westin Boston Seaport District. So those are some of the classes that we're actually focusing coming up. If you're in those areas, traveling to those areas, join us. It's free if you're a Schwab client. You can actually get more information at schwab.com/events. Now, just real quick as we hop right in, want to kind of take a look at the VIX immediately. We'll talk about kind of some of the reaction we've actually had with the indexes. Want to also just take a quick gander at gold and silver, since those are trading pretty actively. We'll also include oil. Kind of talk about how kind of some of the markets playing out here today. Now, first off, does technical analysis forecast a war? What's your take on that? Does technical analysis forecast a war? Well, I mean, first off, I mean, this has been going on for a little bit here where there was some, fighting back and forth between different countries, and the volatility had actually been going up over time. It wasn't just like one day. It just kind of been staying a little higher. Now, when we also see that the VIX had been going up, that's a forecast that the volatility would actually be higher in the S&P 500. We can also see, for example, just real quick, when you take a look at the gold, it wasn't just up last night, okay? It was up before then, let's be honest here. And if you take a look at silver was up before last night too. And you're going to see that, yeah, there was some anxiety of what might happen, but it doesn't necessarily pinpoint when it's exactly going to happen. Now, again, it also goes back to why some investors were in income type trades, okay? Whether it's utilities, staples, real estate, healthcare, non-biotech, and so on. He could also kind of tell us why some investors were more international than domestic. So were some investors positioned for last night? I think you could say that. However, when you still have the event, it still is a little shocking considering that maybe some things might happen outside of what you thought. Okay. And I won't go into those. You could speculate on that. Now, if we look at the VIX right here, you're going to notice that when we've had spikes, last spike we actually had, pretty decent one to that 25 or higher level, was right around, let's say, November. Didn't last very long. That one right there popped up, didn't last for very long. This one right there, the May, that one right there, April, and that one actually right there is earlier April as well. So the question is, why doesn't volatility keep going up? Well, because the unknown becomes known. The people that want to protect, if they're going to protect, they protect. If those who want to get out, they get out. Now who wants to get out? And so when the prices go down, they might not be willing to sell at those price levels. Now, what is interesting is when we take a look at, just real quick, the S&P 500, you would think that with the market, for example, the news over the weekend, market's for sure going to be down. Well, remember, those who wanted to get out, if they want to get out in the morning, they can get out. Try to get out. Check liquidity. If you actually look at, let's say, the S&P, it's kind of still in that neutral-ish range. Now, I'm going to say it. The equity market for the U.S. is, I think, based on current trend, last 3 weeks, we'd say at best is neutral. This market is not necessarily just buy the index itself or something that tracks the index. It's a stock picking market, meaning some investors are not betting on the index per se. They're betting on individual names. Okay. Now we went over that Friday, but if you look at, let's say, the NASDAQ, that has to be down for sure. Well, it's actually up. Now you got to ask the question. You got to ask this. Why would they buy it? The NASDAQ opens up near the low and they come in and buy it? I mean, that kind of goes against everything. Or does it? Okay. Now, if you look at, let's say, the Dow Jones itself, pull that up, Dow Jones, that one was the one that went down the most, but even that has a long tail. Okay. And if you look at Mr. Russell, that actually looks like kind of almost a piercing line. So it kind of also, now the other one I do want to bring up is if you take a look at the US dollar, why is the US dollar going up? Well, because remember, we said gold, silver, copper, right? That is like a consumer staple to some degree. It's also like, you can think of it as a form of cash or trying to have some cash, not exactly cash. But if you take a look at this, you're going to see the US dollar went up a lot. What does that probably tell us? Well, it's probably telling us that some people wanted to go to a cash position. They also wanted to go to currencies that have liquidity. Okay? And you saw that today. Now, when we talk about sectors, one thing I think is kind of interesting is when we talk about sectors, all sectors, this is what's kind of surprising. When we open this up, before we look at some positions, we would absolutely think that most sectors are just destroyed. It's really not true. And if we look at this, what we're going to notice, and I'm talking about right now, the S&P 500, there it is down at the bottom, right? We can see that right there, okay? The S&P 500. The financials have been down, fine. Discretionaries have been down, fine. Tech has actually been down, we can see that. And the other one that we can actually see right there is really the semiconductors. Now, let me ask you a question. Which sectors improved from last week to this week? Which ones? Type it in the chat. So if we said which sectors improved from last week to this 2 weeks ago to this last week, really would have to say transports. We would also really have to say, if we looked at, let's say, I'm talking about improvement, we'd have to say real estate. We'd also have to say, if you look at this, well, actually, it's really those two. So when we look at real estate, give me some stocks that match in that area. And if you look at, let's say, transports. Now, does that mean that the other areas are not as strong? No, they're just still strong. They just did not improve. Now, one thing I think is interesting to notice when you look at the trend, this is the trend on the daily chart. That's a lot of threes. That's a lot of stocks above both moving averages. This is the trend W, trend weekly. That is also a lot of stocks that are still showing that they're pretty strong on the weekly chart. Now, let's take a quick look at these. By the way, one chart that we did not show is CL. If you take a look at CL, what I want you to notice is that had been the chart that had been moving to the upside, but then again, today it got a gap. So, of course, if we see crude oil going to the upside, what does that probably tell us? You know where we're going. We know whether we're going to the energy sector. Now, if we look at this just real quick first, when you look at the energy space in general, Chevron and Exxon would be the top two in terms of if we're talking about the biggest market cap in that area. Now, other things like ConocoPhillips, Haliburton, Baker Hughes, and a couple other names, etc., Fang, right? Those have actually been quite strong, sure. Now, but if we talk about kind of some others that are getting some love as well, we saw industrials hitting a brand new high here today. Can anyone tell me the industry group that is actually helping the industrials get a push here today? Exactly right, aerospace and defense. Now give me some of those tickers. Well, if we look at this, Lockheed Martin gap to the upside, fading back some. We actually see Raytheon, RTX, gapping to the upside. Probably one that's a little bit closer to the breakout point, if you will. Honeywell, okay? And that's actually the one that's kind of sitting right here. Now let's kind of pause for just a second, okay? Now, if you look at this on Honeywell, we talked about the MACD divergence last week, right? We talked about the MACD in general, 3 different setups. And what we're doing is we're kind of looking for stocks that might be kind of earlier into the setup. Now, let's just get this out there on the table. Number one, let's say tomorrow, Russia starts fighting China. And the market didn't know that. Well, and someone takes an entry today. Well, what is that probably going to do to the stocks? It's probably going to push them down, right? Now, it's no different if we owned a business, whatever it was, and then a competitor comes up and maybe makes a product similar to ours, whatever, and competes with us. It's really not any different, okay? In the stock market, it just might happen faster as far as price movement. Now, what I'm going to do is first trade here is we're going to go try to get into a aerospace and defense stock, okay? Now, remember, that's the industry group, and then the sector is industrials, okay? Now, if we were to look at this, we're going to, now, if we talk about the timing, we really are in step 2. And if you look at this, we haven't had the short-term moving average cross over that 20-period moving average. The key word is yet, okay? That MACD is starting to turn up, and some people kind of like that. And I'm going to show you a little variation. I'm going to right-click on this. Now, remember, when we're talking about doing any trades, you always got to ask yourself the question, how much are you willing to risk? Well, if I actually brought up this Honeywell, we actually said, okay, we're going to right-click on the chart, buy custom, and we're going to go with stop. If we said, look, I'm willing to risk, let me start with invest first. I'm willing to invest $4,000 or 10% of the capital in the portfolio. $4,000 would be 16 shares of the Honeywell stock. Now, if you take a look at this on Honeywell, the reason why people might like the timing of Honeywell is it really hasn't gone up a ton. The keyword is yet. Now, we're wondering if it could. Today is the first day of that close above the high of the low day, the first. Now, if we zoom in and say, where do we see that support area? And I'm going to kind of take the lower end of this. You might take something a little bit more closer to the price, maybe 242 and change. But if we gave a little wiggle room, we might say 239.74. If we take 239.74 less 2%, it's going to give us 234.94. Okay, stop date GTC. Stop right there, okay? Now, When you take a look at this, we have an entry price. We're saying that price or less. If it gets filled, we got a stop price right there. Okay. So when we talk about the indicators, well, it's the first day. Well, actually, it's technically the second day the moving averages have gone green. Number two, second day, first day that we've had a hold. Third technical indicator point is this is the first day we've actually also had a shorter term to intermediate high. Okay. Now we might say what's maybe lagging. We don't have the crossover yet, but those moving averages are pinching. If we're buying, let's say, a stock like Honeywell, clearly you're playing top-down analysis. Now, we got to ask ourselves the question, is what happened between the U.S. and Iran and Israel, is that maybe the last time some country is going to fight with each other? Probably not. Okay, so there can kind of be a focus on some of these aerospace and defense for a while. Now, if you went back to, let's say, Lockheed Martin for just a second, it's not like that just started to go up. There's been some periods over here the last couple of months where there's been some strength already. Now, I want to go back to just real quick the VIX for just a moment, okay? Sometimes when the VIX goes up like it did this morning, it pushes up stock volatility. And if you get the VIX to go up, and that probably means that some stocks went down, you might be kind of thinking, well, if I looked at, let's say, some stocks that are down, what stocks kind of continue to kind of show some strength? Well, let's take a look at one newer one. Okay, we're going to do a trade on this. And then what we're going to do is we're going to look at a past example and some current trades we have. One of the stocks that's kind of holding up, and we mentioned this on X, it's been kind of noteworthy, kind of like when this stock gapped down, 210 was the level resistance. We talked about when you gap down, if it's a green candle, draw the line at the closing price, and that becomes your line of resistance. We said that. And boy, has that played out quite well. We have not been able to really get above that area of resistance yet. The best day that we had, maybe, was the second. And if you look at that, we went down for a day, green candle, green candle. And on these down days, you're still getting people to step in to buy. Now, why are they buying? Why do they buy below the support level? Got to ask that question. If they're buying below the support level, don't you think they would buy above 210 if there was more momentum? Now, let's say the investor said, you know what, let's go to the trade tab for just a moment. What is the implied volatility on this? So remember, when markets go down, volatility goes up. That's not necessarily bad for everyone, okay? Some people might be saying, look, I'm trying to get in at more attractive premiums. Bigger the premium, higher the volatility, bigger the premiums. Bigger the premiums, lower the break-evens. Now, what I'm going to do is I'm going to go to, let's say, the 17th April. Now, if we went to 17th April, what we're trying to do is give ourselves a little bit more time. Now, let me compare and contrast this for just a moment, okay? So when you look at the 20th of March, that implied volatility is 37. If we went down to the 17th of April, it's actually the implied volatility of 35, if we're talking about the monthly options. If I said, hey, by going farther out in time, if we chose a strike with a delta of, let's say, example given 30 to 40, it would really be the 200 strike. And if we bought, let's say, the strike below that, you're going to see that as a 10-cent wide bid-ask spread. You got 10-cent bid-ask spread right there. You got nickel on the 190. So I'm going to go right-click on the April, sell. We're going to go right to where it says vertical. And let me actually put this right in that account. Sorry, I thought I was, but when I pulled it up, I knew I wasn't. Pull it up. I'm going to go back to the Aprils, close that down. I'm going to the Aprils to try to give it a little bit more time. And there's not a drastic difference on what I see on the volatility. So I'm going to go to Amazon. And we said the 200s. Let's double check that. 200s and the 190. Sell the 200. Buy the 190. Now, again, and I want to kind of say this, in a market that is more volatile, being a stock-based investor is probably more riskier. Why? You have a higher delta. Okay? Now, higher delta is great if the stock's going up. Higher delta is great if there's less volatility. Okay? But if you got more volatility in the marketplace, you might cut the stock position, have less shares, be able to handle more volatility. Second, you might say, I'm going to buy a group of stocks, not just one stock. How many of you get that? Okay. The other thing is you might say, I'm going to change the strategy. I'm going to do something that has a defined risk. I don't have as much capital outlaid. It's going to give me a maximum credit, and then I have a built-in maximum loss. So with this example, the first trade was on Honeywell, a stock position. Second trade, we're going to do sell Amazon, the 200 and the 190. Now, I know what you're thinking. Well, we haven't broken to the 210 yet. I know. If it breaks the 210, we're going to try to add to the position. One thing I've learned about my time in investing is I think a lot of times, a lot of investors feel like they get in too late. A lot of times people say, well, I'm going to wait for it to break resistance, then I'm going to get in. But the problem is when it does that, they're not around. They're not watching. So some people, what they do is they spread the entries out. Now, I'll show you an entry in just a moment. But if we look at, let's say, the max profit, which is the credit, max loss, spread width minus the credit, selling the 200 and then getting the 255, and then you're going to see there's the break even. And then there's the commission, okay? Now, I'm going to now go ahead and actually send that order. I'm going to see if that can't fill. Now, the comment is why the $10 wide spread chosen? Well, if we take a look at that, is because we can take that risk. 755 is, we could do one contract that, but we can't do more than that. But if you said, James, I can only take $300 worth of risk, well, then someone would be doing a $5 wide spread, okay? Now, let's go back to something, and I want to show this, okay? Now, one of the stocks, now, for some people, they like to kind of track that P&L, that account balance over time. One of the ways you can see the balance on the account, the specific account, is you can go back to, hey, what was this account before the volatility, before the weekend, et cetera? Well, the 26 is at 41,001, 46, and then here we are at 45, 40,500. Hasn't really moved a ton, but it's down about 1.5% since February 26th. Now, if we're talking about individual positions, okay, one of the things that I think is the most helpful, if we're talking about indicators of how the positions are doing, good or bad, it's this trend column, the 10-hole counter, the 20-hole counter. So if we looked at, let's say, example given, Barrick Mining, 100 shares of stock, it's still showing us trend 3. It is still showing that this has been 14 days, okay, of where the moving average is green, and 11 days of the moving average green on the 20-period moving average. Now, let's just go double check something on that position. Now, if I bring up, let's say, B for Barrick, I want to kind of just double check this, and I want to show this. I had historically shown you just where you can see the stock entries. Our stock entry was right there, okay? Now, if we went back to this, we can also see where the stop is. That stop might be adjusted, okay? We can see that right there. The other thing is if you said, James, I didn't know you could do that, we can go right to that little gear right there. And if I click on this gear right there, it's going to say show orders, okay? And you want to make sure that it says show trades, okay? So now I'm on the Papermine account. I'm going to show in the platform itself where you could show the stock trades and option trades. Let me show you the quick difference, okay? So the way we did on Papermine is we went to that little gear and just say show trades. Okay, fine. Now, if we went to, let's say, this, we said, hey, if I went to charts just for a second, same thing, click the gear. Well, some of you might actually have stock and option trades. Well, same thing. You're going to see you show orders if you had like a buy or a sell, like stop or limit order, whatever. Positions, okay? It will say show for underlying only, show for options only, show all. Please do, okay? Now, if we say show all and just show the trades, just check that, whether we have stock or option trades or targets, buy orders, sell orders, whatever. It's going to show the orders and the stock and option positions. It's a great way to actually go back because over a period of time, it's going to show you where you bought and sold over time, not just recently, okay? Now, let's go back to this for just a second. On a stock like this, right, where it's been going up, 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 there's been that green shading, and then today we're seeing a little pinch. Got to ask ourselves the question, can we really raise up the stock? Well, if we came back down to this order, you're going to see if we came to this next chart, there it is. Where is that 10-day low? Well, 8-day low is at 46.26, and that red line at the 10-day low is at 45. So again, being disciplined. I'm going to show you one that we were not disciplined on. If we were being disciplined, we said, look, I'm going to move the stop to that 10-day low. All we're going to do is left click and drag it up. Do not click on the X because it'll cancel the order. Send the order back. And that's a trigger to sell. Now, one we kind of say like, wow, that was not great, is ON. What do you mean by that? Well, on ON, let me just double check this. Yep, there it is, ON. Let's go back to that chart. We can actually see where those shares were purchased, okay? Now, the first time we actually bought those shares, it was right there. Now, it's pointing that. It says 35.11 at 71.12. Okay, now, what happened this morning? Well, this morning, it looks like we had another buy order that got filled this morning right at the support area. Now, we kind of have to laugh at this a little bit because it looks like we got in right there. 4 or 5 days later, it starts to pull back. Now, if we're talking about raising stops, didn't do that great a job on this because there's been red moving average lines on both moving averages and a negative crossovers for days now. So if we were talking about being disciplined, that could have been stopped out. But if we got in here, that stop out most likely probably would have been there. It probably would have been a neutral trade. However, there was a pending order to buy near the support area. Now we have that dollar cost averaging. Clearly, we don't have the moving averages green yet. This is early into that setup. This is called really buying on the price level of support, thinking that the price could go back up. We'll have to wait and see if that really materializes, but that's one that kind of wasn't traded as well. Now, I want to kind of show you that. Now, I wanted to also go back to a couple other stocks that are kind of standing out a little bit. So number one is I'm going to bring up a stock. Let's go back to energy for just a moment, okay? Now remember, some investors, what they might do is they might just buy the neighborhood, not an individual stock, okay? There's reasons why an investor might consider that. Now, if we take a look at this position, a new position, let's say the investor said, look, I think the stock could actually go to the upside, right? Well, one of the stocks, and I'm going to pick, if we pick the energy space, we went to Market Watch, Visualize, and if I said, just show me, let's say, the S&P 500, the energy. If I click on energy, you're going to see that, remember, the bigger the square, the bigger the market caps. Now, if we buy Chevron, it's almost like buying Exxon. They're not perfectly correlated, but what one does, the other one probably does as well. Not always. Okay. Now, if we said, well, okay, we have a brand new crossover happening on Chevron, you might say, well, the red candle is horrible and it's too high. We'd probably push back on that. We'll double check. If I took a look at, let's say, Exxon and said, why did Exxon pull back? Well, one of the tools that we use quite a bit, and you know where I'm going, is we use the moving average envelopes for a tape measure. Remember, yellow line is what percent off the 10-period moving average? It's 3%. Okay? This stock was above the red line, which is 5%, and the white line, pretty much which we almost nailed here today, was 7%. So why did the stock gapped up to that point? Why do people sell into that? Well, because they're counting on that if other people are using these envelopes, that other people would see it and say, that's not a time to maybe buy. That could be a time to maybe sell in the short term and try to get the stock to come back down. Now, who does that? Short-term traders. Now, if we looked at silver real quick and say, did silver do that today? Well, yeah, it did. Silver actually today went to the dark blue line, which is 10% above the 10-period moving average. So you wake up, you actually think, oh my gosh, silver's so high, it's unbelievable, blah, blah, blah. And all of a sudden people start selling. You're like, what? Why are they selling? Well, they're selling because they probably have profits and they're way far off that support level. Buyers that are trying to buy are not probably trying to buy 10% off the support level. They're trying to sell. Okay? So you always, this is kind of like a really good way to kind of gauge where are we, closer to a buy setup or closer to a sell setup. The higher we go up to the yellow line, 3%, 5% red, 7% white, blue, okay, 10%. I'll share that. I put the 10% on because there's been a couple stocks that have really been doing that. Now, the comment is, and this is fair, and I think this is very fair to bring up. It feels like mining is running out of steam. Well, I think when you look at mining, if we brought up a stock like that's probably had a decent move, like AEM, AEM has been pistol hot in the fact that it's been really riding the white line for a couple days in a row. The chances that it can keep doing that become less and less, some holding up better than others. If we looked at NEM, you're going to see that it went up to the 5 here today, okay, 5% line, some more than others. I think when you look at that space, I think you can make it's a fair comment as well, because when you look at, let's say, gold in general, gold this morning went up to the closing prices of where gold was on January 28th. So could that be some profit-taking area for some of those technical traders? Sure. Okay, so it kind of depends upon which one, but I agree with your comment. There's some that kind of look like they're a little richer, fair. Now, if we went back to Chevron for just a moment, okay? So if I looked at Chevron and said, are we too high? Well, remember, the investor, if they're trying to get in where there's an upward trend in momentum and there's a potential entry setup, that could be a breakout. That could be a crossover. That could be a hold. All of the above. Doesn't have to be all three. But if we're still, let's say, below that yellow line, it's probably not as high as we think it is. Okay? I know what we're thinking. I wish I would have bought it on Friday. Okay? Well, fair. Now, what I'm going to do is, in this case, I'm going to right-click on this. Going to go buy custom with stop. Now, if we do this, let's say if we went back and said, look, capital I'm going to put to work here, 4,000. If we look at this, how many shares? Well, 21 shares of stock. Now, what we got to imagine here is with kind of the U.S. and what happened with Iran, et cetera, and Israel, some investors could really be kind of forecasting that there might be some inventory troubles, if you will. Maybe some areas not pumping as much, disruptions, shipping, whole 9 yards. We'll come to shipping in just a second. But if you look at this, what you're going to notice is we're kind of counting that the prices of oil might be a little higher for longer. The higher prices a little for longer might actually mean that some of these energy companies might benefit in the form of revenue and earnings per share. I know that's horrible because that means that the consumer might have to pay more, okay? Don't remind me, okay? Dated GTC. Now, if we look at the stop underneath, okay? if we said what has been acting like a level of support. And remember, we always ask this question. We want to say, where is it pulling back to? And then bounce back up. Where's it been pulling back to? And then bounce back up. Where? Well, this has kind of been falling down to the area of that 10-period moving average, that light blue line, which is right around 183.30. Now, the natural, let me tell you what I did, which was just absolutely not smart, okay? A lot of times when the market is more volatile, people think, well, oh man, what I'm going to do is I'm going to set my stops real tight. Well, they're extremely successful. At what? Getting stopped out. So what some investors do that have a little bit more experience than that, they say, look, I'd rather take a smaller position, allow for some more wiggle room in the price. If we took 183-ish, the horizontal area, less 2%, it's going to give us 179.63. 179.63, okay? Now, if we go confirm and send, now let's kind of say that over the next couple of days, we see that the shipping of oil from the Middle East is not coming through yet, and then it's not coming through some more. Next week after that, it's really only half of what they thought. Well, you could get the price of crude oil itself that might go up longer. You could actually then see, can some of these drilling stocks like Haliburton, et cetera, would they actually go up for longer? That's the idea. We don't know for sure it's going to happen. If we know for sure, why were we putting $4,000 in? The investor might say, I'm going to put the whole thing in. But that's why they don't know that. That's why they set the stop, and they don't know the future. Okay, they're going to go ahead and send the order. That order is sitting right there. Now remember, it's sitting right there, plus 21 shares at 188.89. If that fills, there's the stop. And that's saying if we go down to that price or less, it's triggered to sell. Okay? Now, if we go back to something just real quick. Now, we're not trading futures, okay? But if you said, and by the way, you're going to see that why did crude oil go up so high? And again, another example, my gosh, okay? Why did crude oil go up so high, spike to 75, and then come back down? Well, a trader that trades deviation. Now, you can think about this as both ways, right? When you get higher and higher off support, those who might want to buy might be gun shy to buy. Meaning I'd like to buy Friday, but that higher price in one day, no, thank you. But if someone had that position or something related to that, they might say, I'm going to use the pop and sell into that anxiety, sell into that fear. Does that make sense? Now, it doesn't mean that it can't consolidate or pull back a little bit and make a higher level go up even more. But to get new buyers to come back in, you're going to need to probably establish a higher support level or kind of come down a little bit closer. The moving average envelopes win again. Because if someone came in and said, look, I'm just going to buy, well, they were very, very effective of just, buying at the wrong time, okay? If we're going to teach you anything, it's like watch where the price is in relationship to the envelope lines. If you're above the white line or that dark blue line, you're probably going to see more of a pattern of selling than buying, okay? It's the opposite of your emotion, okay? Now, I'm going to go back to just real quick another comment that came up regarding Haliburton. Now, Haliburton, if we said, well, why does Haliburton get brought up? Well, Haliburton, what you're going to notice is completion and production and drilling, okay? So if we take a look at this, some of these companies that might be directly responsible for getting it out of the ground, okay, example given Haliburton, that's also one if we said, well, I'm sick of these higher price dollar stocks, could I do it with maybe a lower price dollar stock? Well, let's use Haliburton. Now, if we look at Haliburton, what you're now going to notice is if we kind of brought this back up and said, how high were we this morning? Right at the red line. Now, if you said in the paper money account, what's the highest the paper money account would like to buy the shares at in the paper money? And the answer is below the red line. If it's over the red line, it's going farther and farther, okay? It's getting more and more riskier is what I mean. Now, if you look at where we are today, we're now in between the light blue line and the yellow, Now remember, for some investors, they might say, look, this is where I like to try to get in, okay? A little bit closer to that support level. Now, if I came back in, and I'm going to share that again in the chat, just so if you said, give me that chart, there it is right there, okay? Now, what I'm going to do here is I'm going to right click on that, okay, right where the price is, buy custom, and I'm going to go with stop. Now, what you're now going to notice is when we take a look at, say, Haliburton, if I take these bottom lines off and I kind of said, what has been acting like a line of support? What would you say? Well, now remember, this goes back to your trading price deviation, which is, by the way, it's called a mean reverting level, okay? And if you take a look at this, the bottom of this range has kind of been the lower line. Now, if we said, what is that lower line? The lower line, that is, when I say lower line, the fuchsia line, that's 2% below the 10-period moving average. Now, what I'm going to do is, it's hit that a couple times, like almost there, almost there, a couple times there. If we set a stop right on that fuchsia line, probably pretty good chance to get stopped out. We're going to set it 3% below the 10-period moving average. Where's the 10? The 10 is sitting at 35.34. Now remember, on stocks below $50, we use 3%, not 2. So we're going to take 34.27. 34.27, okay? Now, what we got in this case, now, why do some people like to buy on red colored candles? Number one, the stock's still in the upward trend. The red colored candle doesn't mean it's bearish. It just means it's lower than where it opened, okay? If you're buying on a red colored candle, it means you still see an upward trend and the price is above support. Very important, okay? Now, if we go dated GTC, we're going to put that right there. Again, if we said, James, this is a $35 stock, this might be able to buy us more shares, maybe. It is giving us 111 shares. If we have 111 and we don't want to do an odd number like that, we could just back this down and say 100. So not quite $4,000 worth of capital, but 100 shares. We're going to go confirm and send. Now, I'm going to repeat this. If someone's buying some energy names, they think there might be some disruption or dysfunction over the next couple of days and weeks to come, okay? Now, if we send that order, it's sitting right there. We can see it. Hasn't filled yet. And remember, the stop is, okay, now it did, 35.88, 35.83, and the stop is sitting right there. Now, remember, that stop is a trigger to sell at 34.27, but it could fill at a lower price. Now, in the last couple of moments we have, 90 seconds, want to kind of flash a couple stocks that some investors might be watching out for. I think some of the areas that we got to keep an eye on this week are real estate stocks, okay? Some of these names like PSA, we're going to also say EXR, okay? They're storage spaces. And if you look at O, these are some names real estate-wise that have kind of been getting a push. So PSA, O, EXR, and of course, the example is in the paid money count, is Simon Property Group. Keep an eye on that space. Now, the other one that we got to keep an eye on is, we made mention in the chat, stock like Valero, but that's a little bit more elevated, so that's why we didn't look at that. And then we have to say in closing here, some of the transportation. If we said what sector kind of might be trying to get a little push, it's transports. Now, there's reasons for that, of course, okay? If we brought up NSC, that kind of looks like your classic flag with a long shadow on this today's candle. You look at a stock example given like CHRW. Now we're talking about trucking. That kind of looks like your classic tilted up W pattern with almost us getting above the middle of the W. And the last one is ODFL. There it is. So keep an eye on some of these transportation ones. Water shippers, trucks, trains, kind of starting to see some movement out of there. Now, of course, if we say transports, We are saying industrials, which we saw earlier with aerospace and defense. Okay, so I'm out of my time here today. But I want to kind of bring that up and kind of just make mention that the market is not as bearish as we would think, which kind of leads us to believe that some investors were kind of thinking that this might happen. But I think we need to watch over the next couple of days. Do equities continue to be bought? And there's not as many sectors bearish as we would think. And I think we also have to say, keep an eye on healthcare. That healthcare area, if we look at that sector, that is the one that's kind of been up against resistance. And could that push? Okay, probably the other sector to keep an eye on this week. Now, coming up next, okay, next class coming up is going to be covered calls and short puts with Cameron May. I'd like to actually say thanks to Brent Morse for answering the questions in chat. And I'll be back on tomorrow, right in the Investing Master Series. And also join Brent Morse with his class on Fridays on condors, calendars, and butterflies. And also don't forget to subscribe to the Trader Talks Schwab Coaching webcast. Now remember, with what we discussed, it was done for example, illustrative purposes only. And also remember that all investing involves risk. And stay tuned for our next webcast coming up next. Thanks so much. Take care. Bye-bye.